please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
And this market continues to hover around that 10,800 mark, and a little bit of softness coming in as we speak. Lever is seeing a little bit of downside traction just around the flat line, that particular stock. Okay, let's get you trades for the last half an hour then. Ashwani and Mitesh with us. Ashwani, what would you work with? I mean, that big build, I don't know. We're in the last half hour, doesn't seem to be happening now. What's the stock call? Ashwani? Okay, I think we're having a bit of an audio issue. Let's get to Mitesh's calls then. Mitesh, your last half hour trades.
Yeah, I do like Mahindra & Mahindra, and it's on the verge of breaking out, you know. So just keeping 927, which is today's high, as a trigger. If it starts getting past that, maybe, you know, today before closing or on Monday morning, that'll be trigger to buy. Keep a stop at 914, look for target of 960. And BEL is more of a BTST call. I think very similar to Tata Motors, extremely oversold stock, trying to give an intraday reversal. Buy with a stop at 109 for targets of 115.
Okay, and Ashwani, what about you? What would you buy today for a reverse trade on Monday?
See, first of all, interesting bit is that the Nifty futures has come back into a premium. That is often a precursor to upside. So, I would like to take home, you know, Nifty, Bank Nifty, because this correction is, you know, milder than what we saw yesterday, again from 10,800. But for the moment, Bajaj Finance is a buy with a stop of 2330, target of 2400. Engineers India is a buy with a stop of 128, target of 126, target of 138. And Uflex is a buy with a stop of 264, target of 278.
Okay, all right. Well, we've got Deepan with us. Deepan, these oil marketing companies have been all over the place, and trades are very erratic. I mean, it moves exactly in step with what we're seeing on a daily basis on crude oil prices. But would you say, from an investment point of view, is there any sense in looking at BPCL, IOC, etc.?
Not really. I think they catch the fancy of traders who look at the oil prices, and whenever crude oil prices are correcting, you will see some amount of trading bounce in the oil marketing companies. But as such, I think, you know, these companies are in a long-term stagnation mode, given that there's hardly any expansion being undertaken by these companies in terms of fresh refining capacity, and more or less, I think they are operating in a scenario where there is a high degree of maturity in the products and distribution setup which they have. And overall, I think the growth of petroleum products, refined products, is around about the GDP growth rates or slightly below. So there's hardly any incentive for an investor to buy into these stocks, except that when they get really cheap and are available at a dividend yield, and one expects a correction in the oil marketing prices, or in the crude oil prices, then you could see a trading bounce in them. But apart from that, I think from a long-term investment perspective, there is nothing attractive in the oil marketing companies which can show that these companies can deliver secular returns like 15–20% over the next 3 to 5 years or so.
Okay, thanks a lot, Deepan, for joining us. Well, that's the word coming in on the markets, but we'll get you some more market opinion now. Earlier today, we did catch up with Mahesh Nandurkar, the India strategist at CLSA, to get his sense of the market and which are the broader trends. He does expect 20% growth in earnings in FY19. Listen in.
The broader trend to keep in mind, is that, over the period of time, over the next 12 to 18 months, what we will continue to see is the Fed raising rates, which has anyway been happening for the last 12 months or so. And incrementally, we will probably be joined by the ECB as well. They've already made a formal announcement that they would be doing tapering of their QE program. So global liquidity conditions are clearly, getting tightened a little bit from here on. So that's a broader trend. Some of the news flows will come and go, but we should not lose that, broader trend, which will continue to unfold over the next 12 months.
Do you see a lot more value left in some of these companies, the likes of M&M, ITC, HUL, etc.?
See, some of the stocks still offer value. I would say that the tractor sector looks interesting. On the FMCG staple side, clearly one not talk about the value, because value is clearly an anathema for this sector, where the multiples are anywhere between 40 times and 60 times. And clearly, the sector has benefited not just from some of the announcement by the government on the rural front, but also globally, the trend where the value has been underperforming and growth or quality has been outperforming. But having said that, within FMCG sector or the consumer staple sector, we would still try to see where the pockets of value are. And I would say, one segment within the FMCG that stands out is the tobacco sector, where the valuations are still quite reasonable. And while there is always a risk of tax increases on this particular sector, but our analysis of the GST collections, especially on the cess and how the SGST portion is doing, etc., gives us comfort that the risk reward is looking favorable for the tobacco side.
Where do you stand on cements? Is it just that there is a specific thing on Ramco, but otherwise cement stocks?
See, I cannot really comment on individual stocks, but what I would say is, from the overall market perspective, as I said, we hold a slightly cautious view. See, specifically on cement, what I would highlight is that while we are clearly very, very positive, on the housing market bottoming out, and we are clearly seeing some very, very initial signs of that. That also reflects in our very bullish view on the property developers, as a space. But in case of cement, volume growth is not really the key driver for the stock prices. What really drives the stock prices is the pricing. And what we are seeing at this point in time is that the capacity utilization levels are still low. There are still players, fighting for market share gains. And in this kind of environment, the pricing has remained subdued. Secondly, the input prices like coal, and the freight costs, have been moving up. And my sense is that, in the monsoon, season where, we've just entered, is usually a weak period for construction activity, and large price hikes are usually unlikely in this season. And then, once we, are out of the monsoon season, then we are coming closer to the state elections and then finally to the general elections. And any large price hike, becomes a political issue, just before the election. So I would say that the probability of large price hikes in cement look unlikely. But yes, from a long-term perspective, the sector looks very attractive. But I'm just worried about what happens in the next 6 to 8 months.
Mahesh, in your note, you do mention that, you've sort of raised your weightage on IT and pharma during the first half of the year. That played out very well. I mean, the IT stocks have been the biggest performers this year. Pharmaceuticals has come out of the shell that it wasn't for so long. But is there still more to go for both of these spaces?
I would take a much more positive view, on pharma at this point in time. In fact, in our model portfolio, we are recommending a double overweight, on pharma sector. The reason for that is, while the market as a whole, as I mentioned, is almost 20% or so premium to historical averages, pharma is just about at the averages. That's point number one. Point number two is, a lot of bad news is already priced in. I would say that the earnings impact because of the consolidation in the US retail industry, and therefore the pricing pressure that most of the pharma players faced is now behind. Also, we continue to get some positive news flow from the US FDA side as well. So I feel that the worst seems to be behind, and in fact for the last couple of quarters we are already seeing a steady quarter-on-quarter improvement in the US dollar revenues as well. And this also fits in quite well with our cautious view on the markets in general. I would say that pharma will be a great place to hide, and we have quite a positive view on the sector at this point in time.
It's not all smooth sailing really for the market. It's come off quite a bit actually. The Nifty has lost a lot of its gains from the top. As you can see, it's now up just about 20 odd points. The Bank Nifty has actually gone into the red, and it is a couple of these names, from the banking space, ICICI Bank, HDFC Bank, IndusInd Bank, that are trading in the red right now. So the market is definitely off its highs. Ashwani, just when one was thinking that, this short covering rally is going to continue, there you have it, it got sold into. But now for the last 15 minutes, what do you do?
See, we are long on the Bank Nifty and carrying it for Monday, because while it has come off, it's not like Bank Nifty is down 150 points, etc. Sell-offs are getting milder. Yesterday was probably a bit stronger than today, but every day if we are coming at 10,800, then at some point 10,800 will give up. So that way we are carrying Bank Nifty home. And in terms of individual stocks, Bajaj Finance is a buy with a stop of 2330, target of 2400. Engineers India is a buy with a stop of 126, target of 138. And Uflex is a buy with a stop of 264, target of 278.
Okay, all right, fair enough. Well, area is going to be earnings season full throttle as we get into next week. We'll be talking about Dish TV in just a moment as well. But before that, let's actually play out what one of the newsmakers of the days, Den Networks I'm talking about, what that company had to tell us about all the fears that have come through in the market ever since we got to know about Jio's big entry in the fiber optics network segment. Let's listen in to Den Networks and then we'll just come back and look at the earnings for next week.
I feel it is good for the sector. This shows the business potential in the sector that exists. So I visualize a lot of attention in the sector, and that will make us also do the business properly. That will bring in a lot of technologies, developments in the sector. That will also mean robust business model need to be adopted by all the fellow cable players like us. The tariffs have been continuously falling out of these telcos' upcoming features and news that they will be venturing into. The model that we are adopting in 100 cities is a low capex-based model, and we are confident of delivering 30% EBITDA as far as those 100 cities is concerned because of the different technology and modalities being worked out in the business plan. As far as 19, the prospects are quite bright, and you will see us turning black by the end of 19, definitely, in broadband as well.
Okay, so that's Den Networks maintaining a brave face. Stock still down, as are some of its other peers. But speaking of the media space, as we're looking at next week in the earnings season, Dish TV is a stock that's going to be on our radar. Manglam's joining in with some expectations. Manglam.
Absolutely, Surbhi. But just a word before that, you know, Dish TV has been relatively saved from the blushes as far as this move on the downside is concerned, is because 65% of their revenues do come from non-urban markets. And as we speak ahead of results, the stock is at the high point of the day. So a lot of expectations, most of them coming in from the cost front. Why is that? Because the company reports its consolidated numbers for the second quarter in a row post-merger with Videocon's business. Together, they contribute or control about 45% of the market. Edelweiss has put out some expectations. They expect a revenue growth of 2%. They expect the EBITDA to actually grow by 10%. Margins of around 28% is what is expected by Edelweiss, and a net profit growth, a net profit of just 5.4 crores. This compares with 118 crores. So there are one-offs out there. We will need to keep an eye out on individual one-offs. The most important number definitely to watch out for will be one, the average revenue per user. Secondly, will be the margins, because the company has guided for cost synergies of close to 510 crores in FY19 for Videocon's merger with Dish TV. So we'll have to watch out for margins as well as how the average revenue per user pans out.
Okay, thanks a lot for that. So that's going to be on Monday. But for now, we have R. Srishankar of Prabhudas Yadar, who takes us through the last 15 minutes of what has been a really volatile day. By the way, the market is just giving up all of its gains right now. And what was turning out to be a good day has quickly reversed. And now all three indices are just about hanging on to the flat line. That 10,800 resistance zone has once again kicked in, and it's sort of come off from there.
So Sonia, it's profit booking because people want to get their plans going. So much football, so many movies to watch, so take some money off and get going. No, that's on a lighter note, but yeah, absolutely. Let's just pull up some of the stocks. HUL has really contributed to this down leg that we've seen, as have stocks like L&T, SBI. I mean, SBI and some of the PSU banks had turned when we began the show, but a lot of that is very quickly getting undone. So yeah, absolutely, I think just about trying to hold on to the green now, the bulls.
Absolutely. Let's get R. Srishankar of Prabhudas Yadar on board. Srishankar, do you expect this market to sort of collapse? I mean, for now, it's been in this trading range of 10,500 to 10,800. But are there any triggers which could lead to a complete breakdown of this range?
First of all, I don't want to say this market is going to collapse, and a collapse is too strong a word. So I will desist from using it. To me, if I strip off 5 or 6 stocks from the Nifty, which has contributed to the upward momentum of the Nifty or the steadiness in the Nifty. The markets have corrected quite beautifully. That's what I would say. So that is the call, and we still believe that it probably may be testing closer to the 10,000 levels. That's my thought process, because the uncertainty that has been there has still not got removed at all. So the uncertain environment that continues. We keep hearing about the snippets about China versus the US on the trade front. So that we don't know what's going to be the outcome right now, how the commodities and various other industries and the segments going to perform. So how the price movements in those segments going to be. And also we have no clue at this stage whether everything is hunky-dory in the crude front, or whether crude will continue to move its upward march, etc. So till the time you have answers to this, there is an element of uncertainty, and the market just doesn't like uncertainty. So in an uncertain environment, I do not think that you will find large number of people willing to stick their neck out to a great extent. So I think the markets looks closer to the 10,000 range. I think a 9640 to 10,000. That's somewhere in that range, 9,500 to 10,000 range is where I think market could be, the Nifty could be. And you're talking about probably closer to 5%, a little above 5% kind of a correction, 5 to 6% kind of a correction. That's number one. Number two, and this uncertainty is mainly from, as I mentioned, from the crude as well as the trade war front, etc. And should this crude price move up, your problems in terms of a trade deficit increases, which affects your currency also to a certain extent, to a great extent. So no, that uncertain environment doesn't make me extremely bullish on the market in the near term.
Fair enough. You mentioned the rupee, Sri. One sector that obviously, I mean, on an academic straight line basis benefits is the IT space. Now, IT has already had a very good rally. What sort of earnings are you expecting, and do you think earnings will match up to the heightened expectations following this rally?
Again, my thought process on that side is, if you look at IT, it's not for 1 month. I think it's for the third month in continuation that sector has outperformed. IT's earnings growth last year for FY18 was what, 3.3%, and in the current year for FY19, I think Nifty earnings growth for IT is going to be somewhere around 4.8%. Nothing exciting when you actually look at the whole Nifty is going to have a growth of somewhere closer to 17% for in earnings estimates. So what has changed, and why has IT done very well? The way I see it is probably in the end of third quarter, most investors were underweight IT. And most investors are underweight the big cap IT also, whether it is TCS, Infosys, etc. And with the crude moving up and the currency coming under pressure, underweights actually getting reduced. Probably still people are underweight, but the amount of underweight, the amount they were underweight has got reduced quite considerably. And that's actually resulted in a rally of not a lot of those stocks. And our IT analyst, Madhubabu, keeps mentioning that you don't see much of an upside right now in the mid-cap IT space. Unless there is you see a sharp correction in many of these stocks. So it's IT coming, the outperformance is coming from A, the rupee becoming stronger, B, relative underperformance of the sector, giving way to a slightly currency depreciation, and the growth, people going lesser overweight on that particular sector. And third, probably money moved from many of the mid caps also to segments where they're underweight. So I think it's a combination of all these factors which has led to probably IT outperforming quite a lot.
Very quiet now. So much for the breakout rally. Today is definitely not the day. We will have to look at the level of sub 10,800 on the screen. That's what it looks like. Just about 4 minutes to close. Shri, I just want to get your take on, okay, don't seem to have that. As we're getting into close, Ashwani, your thoughts on the sector of the day, while overall on the market, I mean, we've kind of come off this auto rally that started this week, and stocks like Bajaj Auto are actually the biggest winners of the week as well. Would you place any fresh bets for Monday?
See, I'm more interested in something like, say, Ashok Leyland, where it's come off a bottom. Bajaj Auto now has 200-day moving average at 3050. Now, if the good news, etc., continues, at some point you will get to 3400. But it's more range bound because, one quarter results are bad and goes down to 2600. Next quarter it goes to 3400. So you want a stock that is more trending. So maybe Ashok Leyland is a better play. Two-wheelers, Hero Moto, etc. have come off the lows, but they are still kind of sideways.
Okay, what about the market itself? We're just counting down to close and it's been so volatile, Ashwani. What would the strategy be for Monday?
See, today we didn't have the best of global cues and the market is kind of holding on. Now, 10,800, we've come off a couple of times. Today it was fairly mild. I think yesterday also the come off was not too great. Now, in case there are some triggers, I think the market wants to get past 10,800. Majority of the sectors have closed positive, advances greater than declines. So the sense still is to buy the dips because today we had a gap down, no follow through. So that way, fairly sideways type market. Don't expect big gains. But last 2 days, today and yesterday, have been very narrow range. And from there, a trend could come out, which could get to 10,850, 900 thereabouts.
Okay, and well, we're now down to the last one and a half minute of this week and this day. 10,767 is what we've got going on the screen. And on the large cap side of it, today was a day that turned out to be very mixed for the banking space for sure. I mean, the Nifty Bank is ending absolutely flat with like negative bias to it, about 18 points down. And perhaps if you actually start looking at, the weak hands in stocks like ICICI Bank, the HDFC Twins, they didn't really play ball, and they have been responsible to a large extent for the underperformance towards the end, Sonia.
Oh, absolutely. So, by the end of the day and the end of the week, we've closed flat, right? Given all the turmoil that we've seen. So, I guess let's just tell you how the day has looked. So, in terms of individual stocks, yes, as Surbi was saying, today you had some pressure that came in from some of the technology names. So, Tech Mahindra was your top loser. Some of the pharmaceutical names, Cipla, Sun Pharma, Dr. Reddy's, all go home as top losers. Lupin as well. In technology, not only Tech Mahindra, it was Wipro that was under pressure as well. So that stock was down about 0.5% or so. And a couple of your other names like Titan lost ground this week. So Titan is down 6% after the quarterly update that came in from the management. On the upside, though, it was auto stocks that rallied. So Hero MotoCorp, Tata Motors, Bajaj Auto, M&M, the whole lot was up about 1 to 3% odd. Reliance Industries was the big gainer today, up about 1.5% odd post the announcements that came in from the AGM yesterday. L&T has been gaining a bit of ground, up almost about 0.7% or so. If you're looking for weekly movers, Bajaj Auto was the big nifty gainer this week, up about 7.5%, and it had Hero Moto for company as well. But the mid-caps have been really all over the place as well.
Oh yeah, absolutely. In fact, the mid-cap index is ending with a gain of about 70 points for what it's worth. So if I talk about some of the biggest performers, interesting day today for BEL. After a long time, that stock found traction, 8% in the upside. Gati has seen a lot of buying this week as well. In fact, for this week, the stock is up about 16-17%. 6% of the gains took place just today. Jain Irrigation was quite smart, 6% up move over there. Ashok Leyland was the biggie that really moved today. About a 5.5 to 6% up move coming through on Ashok Leyland. Century Textiles, 5% up on that stock as well. Some of the Adani group names, Adani Enterprises in particular, was an interesting stock to look at, 4% up. I want to talk about a couple of the tire stocks. Most of them have ended positive. Balkrishna Industries is up 4%. CEAT is up 3%. MRF, Apollo, most of the tire stocks have had some green ticks on them today for what it's worth. So that's the gaining side of the screen. Now let's talk about the losers. And here the geo impact played out quite a bit. Take a look at Hathway and Dentworks. Cuts of about 9 to 12% in these stocks, depending on which one you're picking up. Actually, since we're talking geo impact, I didn't mention Sterlite Tech. Let's also pull up Sterlite Tech because they make optical fiber cables. And that stock was surging away on prospects of better business, 8% up on that one today. Other big losers today included a Shriram Transport, down 3.5%. Jubilant Foods has lost 3.5% as well. And another down day for Avanti Feeds. Very erratic the stock has become of late, about a 4% cut. on Avanti coming in as well. So net, Sonia, as you're saying, I mean, needle isn't really moving for this market, at least on the Nifty, I guess.
Okay, so the needle is moving for the market. So on that note, let's thank our guests, Ashwani and Mitesh, for joining.
Chain Shoppers Stop has been on a debt reduction spree. Divestment of non-core assets and stake sale to Amazon has helped the company wipe out a significant chunk of debt. Speaking exclusively to my colleague Priya Sheth, newly appointed MD and CEO Rajiv Suri talks about the deal with Amazon, and he also says that Shoppers Stop will be debt-free in the current financial year.
We last year had a debt of about 576 crores. End of the financial year, we were at 67, so we wiped out more than 500 crores of debt. And we planned that by end of this year, we will be totally debt-free. And I think that's a good place to be. And we will also have about 270 crores of shares of Future Group, which we got as part of the Hypercity. So I think we will be in a very good position that if we were to have a strategy to accelerate growth, whether it's opening new stores or investing in refurbishing existing stores or investing in the management team, we would have that capital to do so.
So have all the funds flown in terms of all the divestments that you all have done?
So all the funds have flown in. We have a lot, the shares of Future Group, which we got as part of the deal, have a lock-in period of 12 months, and that will be over around by the end of this year. So end of this calendar year. Amazon
had picked up what 5% stake in Shoppers Stop at 180 crore rupees, and that was a very interesting deal that the street had been watching. But you know, in terms of the tie-up, how is it shaping up at this point in time? Is the microsite still, you know, having all your brands there?
So we have now, I would say, majority of our brands on microsite, and by quarter 2 end, we should be able to have 100% of, or 90% of our brands online. We are starting to see traction there in sales, and what we believe is that our association with Amazon is not just about sales, and we want to try and see how we can widen that relationship. We are currently also starting to open Amazon kiosks in our stores. We've opened 3 of them now, and we started to see traction in sales there, and we have to see how that relationship develops and how we can further maximize our relationship with them.
Are you open to Amazon sort of picking up more stake in Shoppers Stop? Is that something that you would consider when the time is right?
So there has been no discussion either from our side or from their side on this, so I can't comment on something which is conjecture at this time.
But would you be open to it?
When the discussion happens, we'll have to see where we stand and where both parties stand.
So you're open to it, essentially?
I think we would be open to any discussion, but at the moment we can't make any sort of talk about it because there isn't anything on the table.
All right, moving on. In a very special edition of our Weekender series, here are this candid conversation between Mangalam Malu and TTK Prestige Chairman TTK Jagannath.
There's a lot of trivia that the world does not know about. I will say, did you know that? Put a character in front of you, you have to give me trivia. This is about your great-grandfather.
Yeah, my great-grandfather was one of the Triplicane Six, who were the rebels that started the Hindu to oppose the British press of that time.
Your grandfather?
My grandfather was in fact a character. He started the business, he quit and joined politics, and he was one of the 6 members of the Constitution Drafting Committee, which wrote the Constitution, and one of the handwritten copies of the Constitution is in our library.
Your father, tell us a little about him.
My father was a visionary. Everything that he thought of was 30, 40 years ahead, which is one of the problems we had. The condoms, pressure cookers, cleaning of oil, toys, ball pens. I mean, the list goes on and on.
So he was the first person to bring all these to India?
All these to India, manufactured in India. A great visionary, but a man who was so soft and gentle that, you know, to run a business, you can't be too soft and gentle.
Tell us a little about your famous classmate. You went to school with someone.
Yeah, I went to school with Jayalalitha, yes. I don't know anything much about her. We were all children. And in those days, boys didn't, there was no boy, I mean, I just remember her as very pretty and very smart girl.
And then you met her later as she became the...
Yeah, my cousin's wedding she was invited to, she came and she sent for me.
Oh.
And so I went to see her and she said, do you remember me? So I said, of course I remember you. And that's all we had a conversation.
Oh, that's pretty cool. You were quite a tennis player as well, and you played with what, the Amritraj brothers?
Yes, I did. And I was coached by the same coach, Mr. Ramarao. Again, I continued playing tennis, but through IT, but after that I just dropped it. I switched to golf.
Finally, one message that you would like to give to all the entrepreneurs who are watching right now.
Don't ever give up. Look at the detailed big picture will look after itself. Go to work every day, work hard. The harder you work, the luckier you get.
The date has been, while of course the markets have been preparing for imposition of trade tariffs from US on China and a China retaliation as well. And the last couple of months actually have seen markets reacting to that also in a sell-off that we have seen, not just in equities but in commodities and currencies as well. But after this has happened today, what the markets would really want to know is on whether it is going to go on, how long, if that goes on, if it is really prolonged, is when it really will start having an impact on the global economy, investment, demand, etc. And that is something that the markets wouldn't really want to see. Caroline Bain is senior commodities economist at Economics, and she joins us on a phone line right now. Caroline, hi. First of all, today isn't really a surprise because markets were prepared for this. From here on now, what is the expectation? What would a trader really would want to see or take cues from this market?
I think what we've seen is not so much about the tariffs that have come into play today.
Right.
I mean, there's the direct impact on metals demand should be quite limited, and they're not really on a sufficient scale to actually affect growth very much in either China or the US economy. So I think it's more fears of an escalation in these trade tensions that is being reflected in prices at the moment.
So what is what kind of case scenarios are you working with right now? Because we've seen $34 billion coming from US. China has retaliated in the same number right now. Markets have known this. We have seen base metal prices go down by 15 to 20% in last couple of months since these all talks started. From here on, after this has happened, how would you look at the metals as a sector? Do you see some consolidation, prices settle down, or be cautious, be jittery, waiting for yet another move to come?
I don't see an immediate bounce back because I think we're still, it's quite possible that over the next couple of weeks additional protectionist measures will be announced. And hanging over the markets more generally is the Section 232 investigation into autos, which obviously could directly affect metals demand. So while there's still this uncertainty, I can't imagine that. I find it difficult to see prices bouncing back strongly. And the other factor to mention is that the more recent data out of China has signalled a bit of a softer economy there than earlier in the year, which would also be a factor that pushing down prices at the moment.
This is of course one part of it, but on the other side, we also have seen a weaker chunk of China economic data, so as to say. There also has been an increase in inventories in LME and Shanghai warehouses, and there also is a demand theme that the markets were playing on for the first quarter of this year. That also seems to be now easing off. How would you look at this other bunch of fundamentals, really?
Well, that's what I was just saying, that is the other element in the recent weakness in prices. I mean, certainly it's been our view since the start of the year that China's economy was going to slow this year. And we have been quite bearish on prices, regardless of what was happening on the trade front, just on the back of slower Chinese growth.
So how much pressure from here on would you really expect for the base metal prices?
Sorry, how much?
Further pressure can you forecast or estimate from here on also?
Well, I actually think prices have probably moved too far in the downward spiral for now anyway. We would have to see quite an escalation in the trade tensions, I think, to justify prices at these sort of levels. So our current forecasts are actually a bit higher than today's prices for the end year.
One final question, Caroline, and while of course all the metals have seen a decline, including ferrous and the non-ferrous metals as well, what would you want to watch on a Monday morning when you come back to trade the sector?
I'm not a trader, so I won't.
What would you advise a trader then?
I think, I mean, it's really just news on the trade front at the moment. I suppose also keeping an eye on what's happening with the dollar, because the dollar has benefited quite a lot from this escalation in trade tensions, and obviously that's been negative for the metals as well. And as always, just to keep a close eye on China's data and see if this soft patch is continuing.
Oh, absolutely. And the US dollar would be, would be in eye as well, because you have the US non-farm payroll data coming in today in the evening, and that is where the markets would be taking further direction from. Caroline, thank you so much for joining us with your sense on what to expect really from the markets. But also joining us now is Renisha Chenani from Monarch Net Worth Capital on her strategies on this space. Renisha, hi. Starting with the metal space first. And while, of course, we have been all over the place in sense of fundamentals and what's really happening with the US-China trade tariffs, how are you looking at the metal prices now, and would you also continue to be short from these levels?
Hi Manisha, good afternoon. I think overall base metal pack has been very much hit from last 2 months. We have seen 15 to 20% downside and hammering in the prices. And technically, if you see, prices are very much oversold. And if you see from here, I think prices have touched very important support levels. And here, I think there would be some support coming in. There could be a short-term short covering that could see, the fact that we have already seen that prices have discounted all this negative news of US-China trade wars, and I think there could be some sort of short covering, and I'm expecting if copper trades above 434, we can see it to rally towards 439 and 440. So above 434 at MCX, I would recommend to buy. Even zinc, I think, is somewhat trading positive today. Overall fundamentals for copper and zinc somewhat seems to be, benefiting at these levels. So I would recommend even zinc to buy. And I think 191, 192 levels that could be seen from here. A short covering is expected from this current levels.
All right. And how would you also look at the crude oil prices? Because, right from Iran to US and China to US tweets on OPEC, there is way too much fundamentals to keep an eye on when it comes to that.
Yes, crude oil has gone too far and prices have been consolidating in this week. We have seen, if you look at the MCX levels, July contract, prices have been trading in the range of 5,000 to 5,150. So I think this, if this range is broken, if 5,000 level is broken, it would be very important support level. And if that is taken away, 100 to 150 rupees downside could be seen. So I would recommend to sell crude oil below 5,000 for the targets of 48.50 on the downside for positional basis, and upside I would keep the stop loss of 5,100. For intraday players, 5030 is a good level to sell with the stop loss of 5075. Downside I'm expecting 49.50. So technicals, it's overbought, and fundamentals also all positive news are already discounted. So both seems to be making a negative sentiment for crude oil for today.
Right, so selling metals, but rather buying metals and selling crude is the view coming in from Renisha. But that's all the time that we have on this edition of Closing Bell.